Hello, this is Professor Capko. Again, we're going to be talking today about accounting, and we're going to pick up where we left off with our last video, where we talked about the accounting equation, which summarized here is assets, which are things you own, equals liabilities plus owner's equity. So the assets, things you own, are equal to the sum of liabilities, in other words, what is owed, plus whatever the equity the owner has. This is going to be the basis for one of the most important financial statements, which is called the balance sheet. Balance sheets are used by corporations or business entities to represent how much equity the owners have in it. So it's going to be a way of showing this accounting equation with a breakdown of the assets, the liabilities, and the owner's equity. Think of a balance sheet as a snapshot. It's a picture taken of the business entity at a particular time. It's at a particular moment. For example, at the end of maybe the year, December 31st of the year. Where's the company at? How much does it own? How much does it owe? And how much equity does it have? It could be at the end of the month or the end of a quarter. Whatever time period there is, it's going to be a snapshot at one moment in time. I differentiate that from something called the income statement, which we'll talk about in another video. The income statement's more like a video. It shows the assets or the money going in and out of the company over a particular period of time, say a year, a quarter, or a month. But we're going to focus today on the balance sheet. And the balance sheet is set up so that you would have the assets listed, and then you would then take away the liabilities, and what's left over is the owner's equity. Right, so you've got the assets, you take away the liabilities, and what's left over is the owner's equity. So I'm going to represent that slightly differently than this because that's how it would more or less show up on a financial statement. If you were to want to invest in a company and look at the financial statement, it'd be set up like that. But for purposes of gathering this information and getting it all in the right spot, generally we're going to look at it like this for purposes of an accounting course or to have a better understanding. So your balance sheet, again, as I said, is a particular date, a particular time, and I'm going to show it and I'm going to divide it in half, more or less, roughly, like that. And on the left-hand side, I'm going to put the assets. And on the right-hand side, I'm going to show the liabilities. And then below the liabilities, I'm going to show the owner's equity. And since we know they have to equal each other, this dividing line, I'm going to tell you, think of that as the equal sign. Or if it's easier for you to think of it this way, you could think of it as a fulcrum, the pivot point for maybe a balance beam or a scale where the assets have to equal liabilities. This amount has to equal the liabilities plus the owner's equity. So everything on this side has to equal what's on that side. Otherwise, it's out of balance. And if it's out of balance, there's something wrong with the math that you've done. Something's been put in the wrong spot. Perhaps there was a arithmetic error. Perhaps something was omitted. Something was put in twice when it should have only been put in once. There could be a lot of different reasons why it doesn't balance, but the key to it is that when it is correct, it will balance. Now, just because it balances does not necessarily mean it's all correct, because there is a possibility that an error was made on both sides that level out or equal it out, and it would not catch that type of error, and we'd have to look deeper at it. But in general, we're going to think about assets equaling liabilities and owner's equity. Just think of it as a scale, and whatever's on one side has to equal what's on the other side. We'll go into more depth in a later video to talk about how things are placed into this scheme, and we're going to use T accounts or T charts so you can get a better view of that. But for right now, I just want to have you have that understanding. Until next time, keep your grade alive and subscribe. And make sure you click the notifications bell and the thumbs up. If you have ideas for future videos, please put them in the comments below. Until next time, this is Professor Capko. Thank you.